Lordstown Motors under pressure to reassure the public and investors after what was a dramatic executive shakeup. The EV company admitting to inaccuracies about what it called pre-orders. Shares of Lordstown are down sharply after it went public through a SPAC. And Phil LeBeau joins us with all of the details. Phil.
Andrew, and we'll talk more about what you guys alluded to, this stock sale from some executives in just a little bit. This is the beginning of what they call Lordstown Motors Week. As you take a look at shares of Lordstown Motors, it's been hovering in that $10 range there. This is essentially an open house where the company is trying to reassure the media and, by extension, investors that it does have a plan for beginning production, securing capital, and overcoming a number of hurdles, actually hurdles that seem to be increasing by the week. Here are the three big challenges in front of Lordstown Motors right now. First of all, the company doesn't have a CEO. The executive chairwoman was the independent director on the board of directors, Angela Strand, but there's nobody running day-to-day operations in terms of being, hey, I am the CEO. They also need to raise capital. They've got about $500 million at least to get them through what they hope is the start of production, maybe secure an investor. And then the goal is to start production by the end of the third quarter. And this is the vehicle they would be building. It is the Endurance electric pickup truck. What's interesting here is that they said last week when they were talking with reporters in a roundtable, they said, well, we have secured orders, and they were talking about that. 2 days later, they came back and they said, we misspoke. We do not have any firm orders. We have expressions of interest from possible clients, and the key here being, once again, this is a company that is portraying orders or was portraying orders as being firm when, in fact, they were not. So as you take a look at shares of Lordstown Motors, keep in mind that they are running low on cash, and they need to, as quickly as possible, get some certainty about what the future holds, guys. And that certainty is going to be a little bit tougher after the report this morning regarding executives, 5 of them in the past, selling some of their shares.
Let's talk about that, Phil. I'm looking at that report. We're talking in total about $8 million over 3 days in early February. Yep. Does the February piece of this matter in terms of the timing of those sales?
I think it does, because that's before they had their first earnings report, full quarterly earnings report, because they went public in October of last year. And this was before they had their first full quarterly earnings report. And when you look at some of the executives who sold nearly all of their shares, one executive in particular who was in charge of propulsion, that's not a good sign for a company that's just starting out, that is trying to convince investors and convince Wall Street that this is the game plan. We can build an electric vehicle. We have the propulsion system. We have the know-how to make this come to market. And then the head of your propulsion sells nearly all of his shares. Now, look, we're not saying that that's illegal or that there was something wrong. That's for the SEC to decide if they look into this. But it does not present the right image that you want, especially going into your first earnings report.
Shepard Smith here. Thanks for watching CNBC on YouTube.